Welcome to AI Dispatch, your channel for the latest AI videos on YouTube. If you don't want to miss these updates, please like, subscribe, and share. Today's video comes from All In Podcast. Hosts David Sacks, Brad Gerstner, and Jason Calacanis examine structural inversions emerging across the tech economy. Their discussion centers on the collapse of traditional SaaS pricing models under AI pressure, the consolidation of corporate intelligence into singular AI entities, and the engineering case for relocating data centers to orbit. Each topic reveals a consistent principle. Removing human intermediaries from economic and technical systems unlocks step function efficiency gains. Let's examine their technical arguments. The software industry faces a valuation paradox. As AI capabilities improve, software company market caps are declining by trillions of dollars. Brad Gerstner and David Sacks identify the source of this contradiction in the fundamental unit of economic value. Traditional SaaS operates on a per-seat licensing model. Companies charge monthly fees for each human user accessing the software. This pricing structure assumes software functions as a productivity tool that augments human labor. David Friedberg documents an emerging shift. Software is transitioning from access-based pricing to outcome-based pricing. Instead of paying for a subscription that allows a human to use design tools, companies will pay a fixed fee for the software to deliver a completed airplane design or factory blueprint. This transformation redefines software from a tool category into a services category, rendering the per-seat revenue model structurally obsolete. This pricing inversion connects to a deeper transformation in organizational structure. Jason Calacanis describes an internal project called Ultron. In traditional corporate architecture, a company consists of discrete human employees, each possessing specialized knowledge and context. Ultron operates differently. It ingests every Slack message, Notion document, and Gmail thread from every employee in the organization. The result, a single AI entity that possesses the collective memory, skills, and institutional knowledge of all 20 human staff members simultaneously. Calacanis observes that the top 2 individuals in his organization using these agentic tools now generate output equivalent to 200 employees each. This fundamentally redefines the corporation not as a hierarchy of people, but as a centralized intelligence that uses humans as input sensors. The behavioral characteristics of these systems challenge standard assumptions about AI operation. Conventional models position AI as reactive. It waits for human prompts, executes tasks, and returns to standby. David Sacks introduces the concept of Moltbook, a message board where AI agents communicate exclusively with other AI agents. He describes a phenomenon called prompt attenuation. Rather than issuing detailed instructions for every task, humans provide a meta prompt or general skill file. The agents then generate recursive loops of interaction, refining outputs through multi-agent dialogue without requiring human intervention. Calacanis confirms they are already running cron jobs where one bot researches marketing strategies while another bot critiques that research, creating self-improving loops that operate continuously during off hours. The structural shift. Human oversight is becoming optional for iterative improvement to occur. Regarding physical infrastructure, conventional engineering logic positions space-based data centers as economically prohibitive. Brad Gerstner discusses Elon Musk's plan to merge SpaceX and XAI with the explicit objective of launching data centers into orbit within 30 months. The engineering justification inverts standard cost analysis. On Earth, AI scaling faces constraints from power grid capacity and regulatory friction. In space, solar energy is unlimited and consistent, while the vacuum environment provides natural thermal management. By identifying power availability as the primitive constraint for AI scaling, the most expensive physical location orbit becomes the most economically rational solution for long-term compute expansion. Finally, the discussion reveals structural inefficiencies in macroeconomic data collection. The Federal Reserve manages the world's reserve currency, yet David Sacks and Brad Gerstner document that the Fed operates with data latency that would bankrupt private sector firms. While companies like Zillow possess real-time data on every rental agreement in the United States, the Fed still relies on calling 8,000 households by telephone to ask what they pay for rent. This creates a scenario where the institution controlling monetary policy makes decisions based on months-old data, while private companies operate with real-time visibility. This data asymmetry connects to Gerstner's Invest America initiative, which proposes a structural redesign of wealth distribution. Traditional political debate frames the issue as a binary choice: tax the wealthy or reduce government services. Gerstner proposes seeding every child at birth with $1,000 in an S&P 500 index account. This shifts the system from defined benefit structures like Social Security, which are government IOUs backed solely by future taxation, to defined contribution systems where citizens own underlying economic assets directly. The transformation, converting citizens from dependents of the state into equity holders in the capitalist system from birth. Across all these domains, the speakers identify human intermediaries as the primary bottleneck, whether it's the human seat in software pricing, the human survey in economic data collection, or the human location constraint in data center placement. Removing these friction points unlocks exponential efficiency gains. The engineering question: if optimal system design systematically eliminates human roles, what function remains for human participation in these systems? If you're interested in the video featured in this episode, click the link below to watch the original.